if we go back to our very first part of our conversation, we were talking about friends of ours who have billions and billions and billions of dollars of Bitcoin. They've never had yield. They've never been able to do anything with it.
Well, I mean, want yield. I mean,
they may not. Well, they don't need yield. Yeah, but I get it. But there's plenty of Bitcoin in the system that could do with a yield, and it's great collateral. It's the best collateral in the system.
Hey guys, welcome to Everyday Finance. Bitcoin's price has dropped to its lowest level since November 11th, 2024, marking the third consecutive day that the cryptocurrency has been experiencing a strong sell-off. Bitcoin, BTC, experienced a brief decline to approximately $82,156 before buyers showed interest. However, the overall market continues to be cautious. They caution that confirmation is still required before a reliable reversal signal can be confirmed, despite the fact that some analysts, such as Scott Milker, have brought attention to the possibility of a bullish divergence with an oversold relative strength index, RSI. A significant number of investors are concerned about further declines, which contributes to the increased market sentiment of fear, further exacerbating this hesitation. Although this is the case, there are indications that buyers are emerging whenever Bitcoin falls into the lower $80,000 range, suggesting that support levels may be forming.
The types of businesses you invest in, you've gone to very much more Web3 businesses as well, things like, in the NFT ecosystem, around the Animoca stuff. You've invested in, the guys here in Cayman, Ledden, who are Bitcoin lending, which is super interesting.
Yeah.
And you've also yourself, I think, and as part of this whole Dan industrial complex, have been involved in the new, what's it called?
Zenrock. So that's really interesting.
The Dan industrial complex. This is what it is now.
That's funny. It's funny. No, we just closed. We had a smaller secondaries fund that we raised for the last sort of 9 months. We've been buying the secondary stock. I try to buy in the companies where I have board seats and I have good visibility, but it's really in the ecosystem. We have a special sits component. We're raising our own SPAC now as well. In this core fund, potentially the SPAC companies in our area.
Very interesting.
And
is the SPAC market open yet?
Well, apparently, this is, well, I don't know if it is in the way that it was in 21, like a gorge fest, but I think selectively it's a great way to bring companies public in a shorter period of time and, et cetera. There are pluses and minuses versus an IPO. And then Zenrock is a company we transformed that we had invested in Credo. We bought it. It had ran into some problems. We bought it out of administration, restructured it, refocused it. And the core tech is this multi-party computation tech, which is the next level of security after multi-sig. We have our own tech. We built it over 4.5 years. And I had just always thought this would be the backbone to decentralized custody. So 4 years ago, I had this. I love this concept of not having your assets custody in a single place, like Fireblocks. They do a great job, but it's a single place. When you have your Bitcoin that's wrapped, that's moving around to DeFi, it's generally historically been just in BitGo. And so I thought, well, this company had come up with the idea of not having your Bitcoin in a single source, having it stored in the network. And to me, that was just like an incredible concept to be able to, because I'd been in the physical gold sales and storage business. And I always thought of, some of the storage businesses in the digital space as like the vaults, of cyberspace. And then I thought, well, what if you can actually hold your digital assets not in a single vault, but you can hold it in many vaults at the same time? And so this tech allows for that. And I just thought, well, what can we really, what can we do with that? What more can we do with that? And we came up with this idea of, and this is our first product, and it's going to be launched in a few weeks, called Zen BTC, which will be the first decentralized yield-bearing wrapped Bitcoin product.
Where does the yield come from?
Okay, so that's
it's always the question, right?
That's always the question, and it'll come from the validators. It'll also come from MEV. It'll come from Eigenlayer, and this is where I traditionally hand off the specifics of where the yield comes from to Randy Little, who is partner of mine and CEO of the business. It's not a huge amount of yield, but it'll be a few percentage points.
If we go back to our very first part of our conversation, we would talk about friends of ours who have billions and billions and billions of dollars of Bitcoin. They've never had yield. They've never been able to do anything with it.
Well, want yield.
They may not. Well, they don't need yield. Yeah, but I get it. But there's plenty of Bitcoin in the system that could do with a yield, and it's great collateral. It's the best collateral in the system.
Yeah, and to have it, to have the Bitcoin stored not in a single place, it just always struck me as weird that the Bitcoin that WBTC, the Bitcoin for WBTC is stored at BitGo. It's just one place. And so people who move around in DeFi I wouldn't think they're the people who would want their Bitcoin in one place, single point of failure. And so it takes a little bit of sort of magic. I think I kind of see it's like a little magical, the tech to make this happen. But I think DeFi is going to explode. Bitcoin is exploding. Bitcoin is collateral. If we can do something a little different and offer yield in a conservative way, I think that's just a bonus. But yeah, we went to we fully operate Zenrock. It's Zenrock Labs that is launching this product, and we actually have a token launch. That's I think it's Friday. Can you believe it? We have a business that we have actually, and it's taken months and months and months.
This is very cool. Who'd have thought you'd be doing this, right?
Oh no, I know the Rock token. The Rock token. We're having our TGE token generation event. It's going to be key to our sort of ecosystem. And look, I think if we can get just a little bit of TVL in Zen BTC, it really becomes something that will become a big focus for us. So, part of the reason I shifted a little bit into that was that, growth equity, which is sort of first 24 investments that we made, companies generally investing more than 50, with over 50 million in revenue. For the last 18 months, there really hasn't been a single proper large growth deal. Zero. And my specific area, so not venture like BC and later these more developed companies, really got hurt by the SBF FTX debacle because he plugged a lot of the growth investors into stock and they got killed. And these are people who were successful in the old world, massive firms, Thoma Bravo, and I don't know, Silver Lake, Tiger, Coatue, Temasek, all of these very large, they didn't get hurt just in FTX, but they invested at very high multiples, 50 to 80 times revenue in some cases, in these crypto blockchain businesses that, promised the world and didn't deliver. And I think they really soured on the space. So the capital has not come back into the growth equity space just yet. I think it's coming. I think we'll start to see some deals. As you mentioned, M&A. We have companies that we think are ready to be brought public. But the venture side, the venture space has come back. It's, the most risky things in our space are exploded. It's and the VCs doing seed and pre-seed things that's been ongoing.
A number of factors, including global economic and political tensions, are contributing to the current decline in Bitcoin prices. Cryptocurrency-specific factors are not the only factors at play here. The cryptocurrency Fear and Greed Index has entered the territory of extreme fear, which is a reflection of the pessimism that is currently affecting the market. This sentimental decline is further fueled by billions of dollars in outflows from spot Bitcoin exchange-traded funds, ETFs, indicating that investors are seeking to reduce their risk exposure in the face of growing uncertainty. Additionally, traditional markets are experiencing pressure, and global tensions are contributing to the instability that is occurring. The recent threats made by former President Donald Trump to impose tariffs of 25% on the European Union have resulted in rapid reversals in the gains made by the stock market, which has added to the anxiety felt by investors. In addition to this, the administration of President Trump has issued guidance for potential layoffs in federal agencies, causing overall concerns to become even more widespread.
My general view is I hate the conservative numbers, and I think it's always good to anchor yourselves on those, particularly when you're building a business. I think for me, the base case, the base case is kind of 250. So 150 low side, 250 normal, 450 blow off 2017 cycle.
By the end of 25?
Yeah.
So,
yeah. Don't forget, I was 2017.
Yeah,
I sold out at 2000 just before that, the usual tax season where it falls in like March, April, May, June, right? I sold out 2000. It went up 10x in 4 months at the end of the year. 10x.
Yeah, but those are smaller numbers. We can't go up 10x.
No, but that's why I'm saying. That's why I'm saying. Listen, it's possible to go up 3x in the last part of the cycle if we get a very strong cycle. That's all I'm saying is that I think that tail is because people have so much PTSD. I think it's underpriced. I'm not saying it's my base case,
but you know how much value will be added to the digital asset.
I think your number of 10 trillion is. Yeah, I think 10 trillion is underestimating it for this cycle. I think it's close to 12, 13, something like that this cycle. Yeah. I think your whole 10T idea is going to sound hilariously outdated very soon.
It brings me right back to the beginning. The first thing we discussed, you can tell where somebody entered the space because 10T will be a joke. It wasn't when it was 300 billion in 2019. 30x, people were like, "You're nuts. There's no way." But yeah, I think 10 will be too small by far, right?
Yeah, way too. I mean, I think within 10 years, if I just follow the log regression channel of market cap, or use a Bitcoin version and impute something out of it, I get to 100 trillion by 2034. Now that makes sense because all other assets are 100, 200, 300 trillion. A lot of assets are going on to this. It's going to be a lot of activity. I don't think that's wildly wrong. That kind of suggests we're only 3% there because it's 3 trillion today. It's
what was that first call you had? Did you call for Bitcoin? What was that very first one in that article?
So I said, I think it's worth $1 million. It's worth 700 ounces of gold at the time.
What year was that?
That was 2013.
Okay,
and I said, I'm going to discount myself by 90% because this sounds stupid to call for $1 million Bitcoin when it's 200. So I'm going to say 100 grand. So we hit my original target from 11 years ago. And I still think we'll hit the other target, which is now 700 ounces of gold is now $2 and a bit million. So I do think somewhere, and that was a bad math calculation, random numbers based on stock to flow, but that kind of feels about right.
Yeah.
Yeah, that sounds about right,
Yeah, I wonder, it's interesting because we're talking about these big numbers. And of course, you've got Michael Saylor out there who's, sucked a lot of air out of the room. Rightfully so. I think he's been incredible for this space. But I haven't sort of sensed as much enthusiasm yet as in previous cycles, right? Like I don't feel somehow, I don't know, maybe it's because some of these altcoins, et cetera, are still down 90%. If you look at some of them, not Ripple, which is now exploded, but some of these. Yeah,
we just started to sit in the last 2 weeks where things are doing 50% in a day. That's what brings in retail. And I know from my WhatsApp messages that people are coming back, but I'm only getting back last cycle people and not new cycle people yet.
Although there are investors who see the current levels as a potential buying opportunity that could last a generation, the general consensus in the market is that caution is the best course of action. Many investors are waiting for the dust to settle before making significant price movements. It is a reflection of the profound anxiety that is currently engulfing the market that the cryptocurrency Fear and Greed Index has now dropped to levels that have not been seen since the collapses of Terra Celsius and Three Arrows Capital in 2022. It is not a single catastrophic event that is the source of this fear. Rather, it is the numerous macroeconomic uncertainties that exist. Some market observers, such as Ben Simpson, founder of Collective Ship, argue that the current period of gloom may present an opportunity for individuals who are willing to take a position that is contrary to the norm. In the meantime, analysts such as Path Hundal, lead analyst for SWP, acknowledge the challenging environment, but they point to a gradual increase in global liquidity as a potential catalyst for further economic recovery. In light of the fact that investors are continuing to keep an eye on these shifting dynamics, the month of March might prove to be decisive for assets such as Bitcoin.